Opening a trade is easy. Closing a trade is easy. Managing that trade is hard. 90% of traders lose money on the market, not just because they don't have enough knowledge or experience, but because they are unsuccessful on managing their trades. You have 50% of chance, even you trade only by flipping a coin. Imagine you flip a coin and buy when head comes, and sell when tail comes. Market has only two ways after all, buy or sell. So if we have 50% chance to be successful while trading, why that many people fail? If we had enough knowledge about the market and we had a good strategy and experience in order to manage that position, would it be enough to increase our chance to be profitable when we have 50% chance while starting? Wait a minute, I want to try this coin thing. I know it's too stupid, but I just want to see the result. Okay, let's flip the coin, and if heads come we buy, if tails come we sell. Let's flip it for 4 times. Heads. Heads. Heads 3rd time. Heads 4th time. Oh my god. Okay, we buy 4 times. Trust me, I haven't tried the results before. Okay, let's buy. Let's make it 1% stop loss and 2% profit. Here we go. We were about to stop, but we won. Okay, let's try one more time. As you know, we will buy 4 times. Let's go. We lost. And we will buy one more time. Let's get rid of this and this. And wow, the market is so choppy. And no, come on. We won one more time. Now we have 2 wins, 1 lose, and we buy 4 times. Okay, let's go. Wow, we were lucky. So we have 3 wins. That means 6%, and 1 lose. That means 1%. We have 5% profit. What can I say? I'm lucky. Of course, I don't want to tell you to do everything by luck. You will be unlucky and may lose 4 of your 4 trades, or lucky and win 2 of 2. I want to try to tell you that 90% of traders lose on the market just because they have lack of consistency, because of not sticking to their rules, or not having a solid strategy. Okay then, let's start to our criteria to become a successful trader. Here are the golden tips. Rule number 1. Start small. Big trading size causes you to make mistakes. You can't cope with the stress mentally while managing the position that might end up with big wins or big losses. This might push you to close the position early even while you are in a profit, or you might change your stop loss level just because you couldn't accept the amount of that kind of big losses. Rule number 2. Trade a good strategy that you are quite sure that it's successful on the long run. If you are backtested strategy yourself, it is the best option. Or you should know that the strategy that you use is successful at least, for example, 50% or more in 100 tries. By this way, market's noise or its choppy style won't irritate you, cause you already know the result. I mean, you know that you are gonna end up with the profit, maybe not today, but the end of the week or month. Also, losing a small amount doesn't cause stress on you because you already know that losing is the part of the game and it is impossible to reach 100% success rate. Rule number 3. Don't break your rules. If you decided to trade a strategy and determine the rules of it, never ever break your rules. Because without your strategy and your rules, you are like a swimmer in the ocean without a boat and a life jacket. Your boat is your strategy and your stop loss is your life jacket. Without having them, you have zero chance to survive in an endless ocean. Rule number 4. Track your results. There is no any successful, profitable or rich traders that hasn't been tracking their trade results. If you want to be the first one in the world, good luck. But this small detail might bring you the victory after months or years of failures. It might be even on a notebook or an Excel file. Checking out your statistics of losses and wins, like in which time frame is your strategy is more successful or in which session you win more, will definitely increase your success rate and of course will increase the profit you make. Rule number 5. Don't overtrade. I remember when I first started learning trading, my mentors always advised me to trade less in order to win more. I didn't understand what they actually meant. I remember my inner voice was telling me, why should I trade less? They might not love spending hours in front of a PC, but I do love. Then guess what happened? Failures came. Afterwards, I tried to increase my knowledge about trading by watching and reading about successful traders' advices, and in every single mentorship videos or books. I missed one more time one of the most important teaching that all of them was mentioning about not to overtrade. Because that was not the thing that I want to hear. I want to hear from them to advise me practice hard and harder to become successful. Actually they did. They advised practicing hard, but trading less. Then failures continued. Because the secret of becoming a pro trader has not to do with trading more. Finally, when I realized that I was missing this important teaching, I started trading less. Guess what happened? I started winning more. Rule number 6. Never trade when you are not in a good mood. Psychology of trading is everything. All the advices, systems, strategies, rules are about managing the trade you open. So if your mood is bad, if you feel anxious that day, or heard the bad news, or even you don't feel yourself well, do you think it will be possible for you to execute successful trades? No, it definitely wouldn't. Insist on trading when you feel nervous or bad causes you to break your rules. It causes you to fight with the market, overreact the results of the trades. And finally, having losing streaks, and this will make you even more angry and pushes you into more dangerous situation like overtrading to take your revenge from the market. Of course, this ends up with more losses. Your anxiety may come to such a high level that you might want to all in and lose all of your investment. Please do not do this. Please do not trade when you don't feel yourself well. There is a high risk of losing all your hardly earned money on such days. Rule number 7. Understand the market structure. We are telling the last that we should tell the first. Understanding the market structure is directly related to your success and your win rates. Is the market going down or up? Imagine you swim in a river. If you try to realize which direction is the river flowing before trying to swim in it, you could afford less while trying to reach the destination point that you want to go. Swimming against the current is meaningless. Why you should do that when there's an easier option to do? Realize the market is trending up or down, or it's in the accumulation period. Avoid selling while the market is trending upwards. This will help you to lose less and also will cause you feel less stressed as well. And of course, do vice versa while executing buy poses. I hope this video could help you to make progress in your trading career. Thanks for watching till the end.